There are two things guaranteed in life: death and taxes. And with over 347,000 personal training businesses in the US alone, you can guarantee that the US government is collecting tons of taxes. In this video, I'm going to explain to you and show you how to expense your life as a personal trainer. Personal trainers and personal trainers with businesses get freedom. And with that freedom, we have the ability to set our own schedules, pick our own clients, train in places that we see fit, and also manage our own finances. And the mistake I see and hear from personal trainers is how to manage and expense their lifestyles. While it can have a lot of benefits being independent and on your own as a small business owner, you can make tons of mistakes when it comes to how to expense your lifestyle and what to expense. And not only that, how to track it and not commingle funds. In this video, we're going to discuss those exact topics of how to expense your life as a personal trainer. I want to start by saying that I am not a financial advisor, as well as I am not a tax professional. What I am is an experienced personal trainer who has run his own personal training business for over 6 years now, and I can explain to you the mistakes I made and what I've learned along the way. So let's start by talking about what a personal training business is, right? So at the very basic level, there's personal training businesses where we train clients. We may train them residential or in gyms. We may collect the money privately, not through a third-party service. This is a operating personal training operation. While a personal training business, which we have 347,000 registered in the US, is a registered business that offers personal training. In order to take advantage of the expenses, itemized deductions, you want to have a personal training registered business. So let's talk about what is 100% deductible. So this gym I'm standing in right now is one of my private gyms that I use to train my clients. The rent I pay here, any services I pay for here, in addition to the rent, is 100% deductible. So what else is 100% deductible? Software and hardware are also 100% deductible. So platforms like TrueCoach, Trainerize, any platform you use, Google Docs, Google Business, those platforms that you use to manage and recruit clients is 100% deductible. What most personal trainers don't know is that hardware like gym equipment you use with your clients over the course of the years is 100% deductible, but your tax preparer may deduct these items as assets. So let me explain a little bit what they mean by an asset. So let's say I have this gym equipment, which is a rack. I buy that rack to have my clients squat with in the gym that I use. It's most likely if I buy a quality squatting rack, I'm going to have that squatting rack for a course of years. What your tax preparer may do is itemize that rack as an asset. And with that, they may deduct the expenses of that squat rack over the course of the years. In special circumstances, you may have the option to completely deduct that rack when you buy it. But it can be beneficial of it as an asset to deduct it over time, over the course of years, so you have that expense as well. So that's the difference between just having a 100% deductible expense in your business, but also how to deduct an asset in your business. So let's keep going with 100% deductible items. So there are two 100% deductible items that I think are very beneficial to being a private personal trainer with a small business. And that's continued education and marketing costs. So anything that allows you to increase your level of knowledge in the field and in your coaching practice, like certifications, books, podcasts, any education you use to help become a better personal trainer is 100% deductible. And to be honest, marketing costs can span over a lot of things. Marketing goes deep into anything you do that helps you bring in clients. And that can cover networking events. It can cover ads. It can cover any type of social thing you go to where you speak to prospective clients. So marketing costs is 100% deductible. And I like that item a lot. So the next two 100% deductible items are two of my favorites. The first one is continued education expenses. So certifications, books, podcasts, any type of knowledge you acquire to help you become a better personal trainer and to service your clients better is 100% deductible. So you can get educated and learn and expense it. And not only that, what's great about having your continuing education 100% deductible is that you're able to acquire more clients and also raise your price while the cost of the education may not go up as much. What's great about having your continuing education 100% deductible is that with that new education and ability to provide service, you can raise your costs without having the cost of your continuing education go up at the same rate. So there's definitely some net profit to just getting educated and having the ability to expense it. The second one is marketing costs. So running ads, networking, events, anything you do to help you acquire clients in your business can be labeled under marketing. And most of all marketing costs, at least the ones that I know and have used, is 100% deductible. What I love about marketing is that it can cover a span of things that you do to acquire business. And a personal training business is a non-traditional kind of business. It's a relationships business. So a lot of things can fall in that umbrella, but I do recommend you work with a professional to help you understand what falls in that umbrella. But I'm pretty sure a lot of it is 100% deductible. Now, let's talk about some items that may not be 100% deductible. A lot of people love to eat. They love to go out and eat. They love to entertain clients. They love to just overall eat. And we love to do that as personal trainers as well. But one thing I learned 3 years ago is that everything I eat and put on my business card is not 100% deductible. Most of all food expenses are 50% deductible items on your taxes. So while you are eating and enjoying yourself as a personal trainer and you need to eat to fuel your body for your business, you have to understand that that's not a 100% deductible item. Some personal trainers operate in their apartments or their homes or their garages. Please understand that that too is not a 100% deductible space. If you also live there and you pay a mortgage or a rent, you can only deduct a portion of the space that you use. Work with a professional, talk to a professional about the exact square footage in which you can use and deduct on your taxes. Another non-100% deductible item is clothing. So here I'm in my work uniform, but this is not a 100% deductible item. I think there's about an 80% deduction that you can take for clothing classified as uniform. But here's the caveat. If you brand your clothing or your clothing items, that can be a 100% deductible item that falls under marketing. So that's a little bit of a way around that deduction with clothing. And the last non-100% deductible item are gifts. So any type of gift or apparel or any gift you give to your clients is showing appreciation over the course of the year is not 100% deductible. We actually are limited in the dollar amount in which how much we can spend per client. 2 years ago, I asked my advisor this, and he said up to $25 per client can be seen as an expense in the gift column. Anything more than that is not seen as an expense. I thought that was a good one to mention because at a high level in personal training, there will be times where we may want to offer our clients some type of apparel or gift or some type of appreciation for being loyal customers. And just to make a quick note, other items such as transportation, travel, mileage on the car, gas, those items are also not 100% deductible and can be expensed to a certain percent on your business. So now that you've had the education of how to actually expense and what to expense and what's 100% deductible and what's not, you need to remember this information needs to be all in one place. So you need a platform, a tool, or some type of software and someone to help you manage this information. So tools like QuickBooks, 1-800-Accountant are some tools I've used and still use over the course of the last few years to manage my expenses. With all those expenses in one place, preferably on one credit card or 2 business credit cards, will allow you to itemize all that stuff at the end of the year, categorize it, and present that information to your tax professional that is easy to understand and easy to use. But also gives you the opportunity to go through that list and really understand where your expenses are and what you're paying for each year. Just doing this each year over the last few years have helped me learn what are my biggest expenses in my business and what are not. What's most important, where do I spend my money, and how I spend my money as a personal trainer has allowed me to manage how I structure my business going forward. So having somewhere for that information and those transactions to live is very important. So next, I want to talk about what goes hand in hand with overall business expenses, and that's overall business structure. So the structure and how you set up your business can be an additional thing you can do to help you save money. 2 years ago, I was doing great as a personal trainer. I was bringing in a lot of money, more money than I've ever brought in as a personal trainer in my business. But when it was time at the end of the year for tax planning, I realized that I did not expense enough stuff. And I also was spending as much money as I was making as a personal trainer. So therefore, in hindsight, I didn't keep as much money because I wasn't structured the right way. After working with a professional and redoing my structure, I learned that structure matters when it comes to saving money. As they say, it's not about how much you make, it's about how much you keep. And keeping more money in your pocket as a personal trainer is imperative. Otherwise, why start the business in the first place? So let's talk about structure. There are 3 main ways to structure yourself as a personal trainer. The first one is a sole proprietor, where you are doing a pass-through entity where the money you make is taxed at the highest level, like a regular W-2 employee. The second way is as a LLC without a substructure. So you are taxed the second highest here as an LLC, but you are registered and taxed as a business, whether it be a C Corp or S Corp or B Corp. The third way is as an S Corp, which I elect to do in my personal training business. And it simply means that I need to pay myself a respectable salary every year and pay taxes on that salary. But in return, I'm able to save money on taxes. And what I do save is that extra 15.3 self-employment tax benefit with myself as an S Corp. So my business doesn't have to pay that extra 15% plus tax because I pay myself a respectable salary throughout the year. And that structure alone can save someone who makes, let's say, $100,000 in their business. That can save you an extra $20,000 in taxes just from being an S Corp. I emphasize being an S Corp because there's one cool thing you can do as an S Corp. You can take a percentage of your net profit as distributions. These are just called S Corp distributions, shareholder distributions. Whereas a shareholder or sole shareholder in the business, I take some of that net profit as distribution, and I don't have to pay as much income tax on that net profit as someone would with a typical LLC structure or sole proprietorship. So structure really matters when setting up your business, and you want to be smart and work with a professional, or just do your research on how you can save the most money. And the last piece I'll touch on when it comes to structure is your personal financial future. So one thing I've done for a few years now is to take some of my net profit and put it into a Roth IRA. With an S Corp being a pass-through entity, simply means that the net profit that I make in my business is added to my income tax personally. So with that being said, that net profit becomes my income. And adding up to $7,000 on a Roth IRA or a little bit more other forms of IRAs, you can save an additional amount of money on your tax at the end of the year, but also contribute to your financial future and retirement. So that little extra piece there allows you to deduct more items off your taxes, but also save money and invest in your future. So the whole point of today was to explain how to expense your life as a personal trainer. I like to make a joke with my friends that my entire life is an expense. And while the IRS may not like that, I simply structure my business to match that saying. Every single thing I do, buy, or consume contributes to how well I perform in my business and the level of service I can provide for my clients. Everything is attributed to my ability to provide my service at a high level. The food I eat, the clothes I wear, to the way I sleep, to what I eat, the spaces I use, all the way up until how I prepare myself for the future. It's all about how well I can perform today for my clients. That means all expenses in my life, all my business expenses. And while they all are not 100% tax deductible, as you learned today, to some extent, they all can be deducted on your taxes. I know a lot of trainers already know this information, but there are tons who don't. So if information like this helps you become a better personal trainer, or you know it can help someone better structure themselves as a personal trainer, please share this information and share this video.